Moving on now to the auto space, it's time for a special segment, Quarter Se Quarter Tak. We'll get you the earnings expectation. Sudarshan now joins in to tell us how Q2 will pan out for the auto sector.
So for the auto sector, it's a crucial quarter, one that's noisy, uneven, but also filled with signal for what's coming next. So let's start with the big picture. Earnings growth overall is expected to be modest, driven by an early festive season, but weighed down by input cost pressure and uneven demand recovery across these segments. Here is how volumes stack up year on year. Tractor is the strongest performer with 20% growth thanks to improved monsoon and pre-festive rural demand. Two-wheelers and commercial vehicles are holding up well, growing in high single digits as retail momentum has improved. Passenger vehicles are slightly soft with volumes down 1% YoY as high base and discounts weigh on wholesale numbers. Now to the four-wheelers, where Q2 will be about narrative, not numbers. Let's take it one by one. For Maruti Suzuki, earnings may be unexciting because sustained high discounts, price adjustments, post-GST annual pay revisions and ad spends for the Victoris launch could compress margins slightly. For M&M, it's expected to deliver steady growth, though margin may dip sequentially due to higher promotional costs and rising EV contribution for Mahindra & Mahindra. Hyundai is seen relatively better placed because operating leverage from sustained UV sales and premium model mix could offset higher ad spends and festive schemes. Ashok Leyland, it may be a stable quarter, volume growth is visible, margin is steady, and commentary on H2 recovery in truck demand will be the key to watch out for. For Tata Motors, JLR remains a drag. The cyber incident-led production halt will hurt output this quarter, although UK-US tariff relief came in late September and JLR still faces some of the more headwinds of fading model cycles, higher incentives in the US, and intense competition in Europe and China. In the two-wheeler space, it's shaping up to be a good quarter for most listed OEMs. Volume growth is around 15% year-on-year, supported by strong domestic sales and a revival on export front. Margin is expected to expand by 40 to 80 basis points on a sequential basis. Bajaj Auto benefits from a favorable currency and export recovery, especially in Africa and Latin America. Eicher Motors should see higher operating leverage from volume recovery in Classic 350 and Shotgun 650. TVS Motor is likely to see margin expansion driven by premiumization in the Apache and EV portfolio. In the ancillary pack, we may see another subdued quarter because weak global production trends and tariff uncertainty continue to weigh on the sentiment. Bharat Forge and Samvardhana Motherson are likely to report weak core earnings, with EPS cuts are very much visible in street models. Long-term growth drivers are shifting from pure auto exposure toward defense, electronics, and mergers and acquisition opportunities for these company. So overall, in conclusion, Q2 will be noisy with mixed signals across segments. The street will focus less on reported numbers and more on growth commentary. This quarter may not capture full optimism of the GST-led price cuts and festive sales boom, but it sets the stage for a stronger H2 and FY26 outlook.
And indeed, and we have to see how much of this is already in the price. Our company is going to sound optimistic enough to keep the stock momentum intact, because if you just look at the Nifty Auto Index, it is one of the best performing indices of the year, the calendar year, with a gain of about 20%. And it's been a very, very smart rally from late September as those GST cuts were announced. Let's pull up a one-year chart of the Nifty Auto Index. It really tells the story. From around 15th of August, end of August, that auto rally really picked up, and it's been literally up and away since then. Jay Kale, Executive Vice President Research at Elara Capital, is joining in. Jay, I'll start right there. So, Q2 is one aspect. So let's take your growth pick in terms of just showing the maximum momentum, either on growth or margin expansion. Which are the OEMs that perhaps could dazzle, keeping the stock momentum intact as well? I think you're on mute, Jay.
Yeah, sorry. Good morning and festive greetings. I think, yes, definitely this time it's about, the festive season and GST cut-led demand. I think a lot, the street would kind of ignore some of the earnings reported, and it will be more of the commentary and the festive growth outlook going forward. We've seen pretty strong commentary from Maruti and Hyundai coming in during Diwali, the Dhanteras sales. And I think that should get reflected in Vahan in the coming days. So overall, I think, from here, what we believe that a 15% odd growth for the festive season is kind of getting baked into the numbers of the OEMs, and which is getting priced in the stock prices. And from here, for the stocks to move ahead, I think what will be keenly watched is who are the market share gainers from here. In our view, in passenger vehicles, as we see the current trends, the first-time buyers coming back, we see Maruti gaining market share. While in the two-wheeler space, we see strong momentum continuing for TVS. While for Mahindra, it will be more of the upgrade customers that will come to the rescue in terms of ASPs and margins. So these three would be our preferred picks in autos, and the commentary will be keenly watched.
Jay, hi, morning. What are your channel checks suggesting in terms of the sales that we've seen from, say, 1st of October till up until now, or the festive season as we calculated? What are the numbers looking like?
Yeah, I think if you see festive to festive, the way we calculate, say from Navratra to till date, the growth seems to be closer to around 20-odd%. Of course, one has to factor in the postponement of purchases that happened post the announcement, and hence we would also like to see the festive season from Ganesh Chaturthi till date, which has been less than 10% as of now. But I think once the Diwali numbers get factored in, I think it should trend towards double digits, which is what the stock prices are essentially factoring in. So as of now, we don't see much of earnings, change as such, given the current festive trends.
And double digit would be high double digits if you calculate from Ganpati to post Diwali, or low double digits?
I think it will be low to mid double digits for Ganpati to Diwali.
Okay. And considering that post the festive season, there is a bit of a lull, what would the numbers look like, say, from November onwards till March?
I think, there is definitely, you will not see such high double-digit growth momentum sustained post the festive season. While the trends of growth rate will definitely be higher than what we saw pre-GST cuts. So what we are expecting for the passenger vehicles post-festive is close to 5 to 6% for the balance November to or December to March period. And for two-wheelers, we are expecting a 10 to 11% on a low base for our full-year growth numbers to be met.
And auto ancillary, what is the expectation? Because we have seen, the previous quarters were a bit subdued. There's been margin pressure, etc. What's the broad expectation?
Yeah, I think auto ancillaries will be, case-to-case basis. We will expect passenger vehicle and two-wheeler exposed ancillaries kind of benefit from the kind of growth expectation we have for the festive season. And we will obviously see some bit of positive momentum in the production schedules for Q3 and Q4. And our top picks within those remain Uno Minda, Gabriel, MindaCorp, and Sona BMW.
Uno Minda, Gabriel, and Sona MindaCorp and Sona BLW. Got that. That's the auto ancillary space. So to go back to the OEMs, Jay, I guess from what you're saying, it's very clear, right? Frankly, Q2 numbers are a shade irrelevant because it all happened towards the end of the quarter, and then the Diwali commentary, like you're saying, that's been very, very robust. So what would your pecking order be for OEMs across PV, CV, and two-wheelers? If I were to, add, let's say, 3 top auto stocks in my portfolio for the next year or two, which 3 would you go with?
Yeah, I think it would be Maruti, TVS, and Mahindra. These 3 would be my top picks within the OEM space.
Okay, all right. So there we go. We have some picks on the auto OEM side as well as the ancillary side. Thank you very much, Jay. Helpful conversation. And then we'll see what the companies actually have to say as those numbers start trickling in. Thanks for joining in today.